Okay, so we've already looked at SPY, so let's go ahead and let's look at Netflix. Now remember, we have an earnings report coming up going into next week. If you're trading options, you want to make sure you're looking at this implied volatility. High implied volatility, yeah, that's gonna point towards higher premiums. So if you want to do anything with Netflix or Tesla going into earnings, you might wanna lean towards a credit receiving position. That's either, for me, you know my favorite, it's either gonna be a vertical credit spread or an iron condor, but you can do, you know, whatever you prefer, but those are just my go-tos because we've been range trading, and you know, range trading is when we're trading in between a cute little support and resistance zone. It's kind of mapped out for us with the super trend indicator here. So this is using Webull. We have some resistance around this 250 range, and we have, you know, some pretty good support around this 220, 230-ish, kind of where we are right now. So we're kind of in between those ranges. You know that Netflix just announced that they're gonna have their new tier of ads. So I think it's gonna be $6.99. So that's gonna be starting going into the holiday season. So that's gonna bring in a lot more revenue. Stocks to watch, okay? So these are some of the big names that we were talking about going into earnings for next week. And I really just wanna highlight this Netflix segment. So Netflix will report earnings on October 18th with analysts looking for revenue at $7.8 billion. Okay, and they're expecting to have an earnings per share of $2.17. They have 1.1 million paid subscribers added to the Q3 quarter, and they're suggesting that that's probably skewed by Stranger Things, but don't sleep on that Jeffrey Dahmer series, honey, because I know a lot of people definitely tune in for that. For investors and marketers, this represents a massive increase in potential premium video ad impressions around the world. So they are expecting stronger demand for Netflix. I mean, just think about the people who pay for ads and they're gonna have their ads on Netflix. Right now, I really don't want to be bullish or bearish because we're going to be doing, you know, a credit receiving position. I would just say have your limits somewhere within that $30 range. So if I was going to have anything, if I was going to do a put credit spread and anticipate the price going up, I would probably have my limits down somewhere around that 200, and you can be a little bit more risky and you can kind of have it right where we have some movement. But I would probably say I would have my limits around 200 and 260. And I feel like that would be a safe zone for, you know, keeping that full premium during the earnings. So that's interesting going into Netflix going into the rest of the week. But if I was going to follow that overall trend, I don't even really want to say bearish. It's really coasting around these 50 and 200 period moving averages here. So I'm still kind of in that range trading.